Welcome into the Bunker podcast. I wanted to go over the bullish case for stocks because I feel like I've been a perma bull and those people are always wrong, right? So, I kind of had this realization that, um, you know, when everyone seems to be calling for this stagflationary environment, what if that's not the case? What if inflation goes down? What if, stocks rally from here? So I did just want to say that, none of what I say is any advice that you necessarily should or should not be taking. I definitely believe in stacking storable foods, physical wealth, growing your own food, things like that. I think that regardless of what happens in the world, will help you and help the world. So there's a few things. Twitter jumped 29% pre-market, trading after Elon Musk took a 9% passive stake in the company. Tesla shares also rose after the automaker posted record first quarter deliveries despite supply chain and logistical constraints, taking other EV stocks higher as well. Chinese stocks went over 4%. We had, like I said, Tesla, and they're saying possibly that markets are volatile and there's every chance that they were oversold. We're going to have possibly Russia and Ukraine again talking again today. So we live in a world where they've printed so much money that even if something should be a bear market, that doesn't actually mean that it will. Um, I think that what the bears fail to recognize and admit, they definitely admit it, but they fail to remember every time because they think, okay, this is the one. This is the mega crash that we've all been waiting for since like 2008. When they started printing all this money, everyone has always said like, okay, it's going to crash, and it's just continued to go up. So, I think what they failed to remember is that it's a Ponzi scheme. It is manipulated, and it has everything to do with the strength of the dollar and the strength of the US as a country and as a political power, as a military industrial complex power. So the market is really a representation of basically the further and further that we fall into socialism, where it is controlled and it's basically the market has basically become the mainstream news at this point where what you see on the screen is not actually what's happening in reality. But there's also so much cash that there's really nowhere for it to go. So people sort of will do anything they can to pile into markets. um, and as we've seen before, Ray Dalio said, cash is trash. So a lot of times people will try not to hold cash. And so, all this time that they've been selling the past couple months, they've been stacking the cash, and they're almost 2 times more than last year's levels, according to new data. And it basically looks at the average recommended allocation to stocks and cash by sell side strategy hedge funds. And so after, um, recommended cash allocations hit low of 2.5% last August, they have jumped to now 4.1%, which is a huge move. And the sentiment on stocks has declined for 3 straight months as investors digest worrisome headlines. And so, what is this setting up for? And I may have made a bad move myself by buying some puts. Like I bought them a little bit farther out. So if we do have a bullish month, there's still a chance that maybe May could be more bearish. But it's kind of it's unbelievable because there's just so much happening in the world. We see, the beginning of like a hyperinflation food scenario. But they're going to hide that stuff as long as they can. And it's almost like whatever the mainstream headlines will, say, like whatever Yahoo Finance is printing or CNBC is printing on their news is how the market actually trades. It's all based on algorithms now. So if the algo sees Elon Musk bought Twitter, that's why you see Twitter go up so much in that short amount of time, because there's so many different programs that they put into these um, that create these sort of crazy rallies and crazy things that are happening. Um, so anyway, what they have found is that consensus Wall Street strategy are a very reliable contrarian indicator. So when they're telling you to dial down your equity exposure and increase your allocation to cash, that's actually net bullish. So what they found is that when the bulk of evidence is telling you to be more cautious and defensive, probably all of that information is already priced into the market, and the market is more likely to surprise in the opposite direction. And so this is what we are seeing this morning. Um, and I also point out that Jamie Dimon, who is a criminal of J.P. Morgan CEO, faces unprecedented. He says we face unprecedented risks from combo of inflation, war, and COVID. Well, to me, again, this is a bullish sign, unfortunately. You know, because he's a contra indicator as well, in terms of he's a scammer. So he will say something is bearish, and then he will do the opposite. So he will create liquidity on the other side of the trade that he is taking as a company position. And again, there like I said, there's just been so much money printed that I think that these people actually need that, to possibly pump this thing. And the crazy thing to me is that, I mean, we already see, like on my previous videos, like I showed you guys how much of a bubble this actually is. And the fact that we need to pump this thing to possibly new all-time highs. I mean, we're not far away. I mean, that's why I kind of took these put positions, because I'm like, are we really going to go to all-time highs with record inflation, um, consumer sentiment, very low, going into an environment that is sort of the beginning of geopolitical risks everywhere, left and right. China, possibly moving into Taiwan at some point. But all of this stuff happens in slow motion. So you have to realize, like, China might not invade Taiwan for another year, and we might not have food shortages for another year, or food inflation. So a lot of this stuff, when I'm calling for it, or other people are calling for it, it actually is not going to happen for like another year, or maybe even 2 years. So you have to realize, like, it's still better to prepare ahead of time, but it's also probably not the best idea to bet against this Ponzi scheme. Um, but yeah, he said there's different circumstances that we've experienced in the past, and um, they continue dramatically rising the risks ahead. The confluence of the COVID pandemic, which is obviously, I guess, happening in China, high inflation, and of course the situation in Ukraine. Yeah, so Diamond warned U.S. firms must diversify their supply chains away from China and instead rely upon completely friendly allies. He also urged the U.S. to rejoin the Trans-Pacific Partnership and the Obama-era trade deal that President Trump canceled immediately after taking office. He said he's been bullish on the U.S. economy and repeated that message in his letter. So there you go. I mean, noting that the American consumer is in excellent financial shape with leverage among the lowest on record, excellent mortgage underwriting, plentiful jobs with wage increase, and more than $2 trillion in excess savings. He says inflation will require aggressive hikes. He said Ukraine war will slow the global economy. World economy faces unprecedented moment. And so again, the Fed faces this fact that, in my opinion, the consumer is not in a good place. And that's just like from what I see, on the street, just everyday people. Um, they're just continuing to consume and consume and consume and build up their, I believe that these people are putting money on their credit card. They're putting a lot of this on their credit cards. Um, that's really fueling the economy. That's going to have to be paid back at some point. And at some point there will be demand destruction on a lot of this stuff. So the price of things are not going down, they're going up, and people are just not going to do anything. And unfortunately, it's a um, sort of a situation of another lockdown, really. Unfortunately, because it's like, are you going to go travel across the country like you wanted to with when gas is this high? I don't know. I mean, it's just a lot more expensive. It's about, who knows, maybe 70% more expensive than like a year ago. So um, we're in unprecedented waters here, for the world, for America. And, I just think, yeah, with Biden at the helm, it's hard to, um, see him making the right moves. What I think, again, I'll say this is my last point, but I do think that there's risk to the upside here, strictly because we live in this fake news environment, um, where they're not going to tell people what's going on in reality up until the very final minute of the hour. Um, just like Germany, right? That they just found out that their prices are going to increase by 20 to 50% overnight. That's kind of what's going to happen here. They're just going to, I mean, I don't know, they'll make an announcement on Saturday and say, hey, you guys prepare for this on Monday. Um, because again, they will just continue to lie up until the final moment of all of these things that they've been lying about. And some of the stuff I can't talk about, but most of you should know what I'm talking about at this point, related to COVID. Um, but anyway, uh, yeah, that's kind of what I wanted to say, is that the market is part of that. So understand that, new all-time highs maybe is a distraction from what's actually happening in the world. Maybe they just pump this Ponzi to new all-time highs, and um, I mean, it would be super super crazy, with rates rising and inflation rising. I just think it would be crazy, right? And maybe that's why it'll happen. So we have to be unbiased here, trying to see both sides. So hopefully you guys got something out of the video. If you did, please like, subscribe, and have a great day.